How to trade the highest probability setup, the 618, the golden ratio. But first, we need to understand trading ranges. A trading range from high to low or low to high equals 100% of a trading range. A trading range can equal one candlestick or a succession of candlesticks. It depends on what time frame you're looking at. And ranges develop in up markets and down markets. Here's an example of various trading ranges in different time frames. It's important to note that all charts act and react the same way, regardless of time frame. Now let's look at swings in a trend. Here's an example of swings in a downtrend. The white line is the major swing, the purple and blue lines are the minor swings. Each one of those swings is a range within the trend. And here are the swings in an uptrend. A trend provides many opportunities because many ranges are established. Now let's look at the Fibonacci ratios. Fibonacci ratios are drawn from a high to a low or a low to a high once a range is established. These are the common ratios that fall between a high and a low. 618 being the most important, the golden ratio. This is the highest probability ratio within a range. Now let's go through the process of plotting the 618 ratio. First, identify the trend. Then identify your anchor points. Here is an example of the swings that we are going to plot. That's including the major swing and the minor swings of the range. Now plot the lines with the Fibonacci retracement tool. Once your chart is complete, it should look like this. It's important to note that if price closes below any one of these 618 levels, you must remove it as it is no longer valid. Now let's do the same process but in reverse. Identify the trend. Identify your anchor points. Since this is a downtrend, we are going to plot from high to low. Now plot the major swing and the minor swings of the trend with your Fibonacci tool. And this is what a chart should look like once complete. Again, if price closes above any one of these levels, you must remove. You may be wondering, which 618 should you trade off since we've plotted so many on the chart? Well, let's take a look at this example. We were able to identify which 618 we should trade off of by using market symmetry. Market symmetry is the measurement of past measured moves, past up or down swings. Market symmetry provides you with real market data. It tells you what actually happened in the past. For more in-depth into market symmetry, check out my video on my YouTube channel. Again, this is the most powerful tool you can use. Trading just based on Fibonacci ratios is a very bad idea because they fail time after time. Let's see some examples. Fibonacci ratios fail by themselves because they need other variables. Fibonacci ratios are based on likelihoods or a chance something likely is going to happen. Symmetry is different. It's based on facts. It's using real past market data. Now let's take a look at both of them in conjunction. That's how you take advantage of the 618 golden ratio for very high probability setups and massive profits.